Hello, my name is Paul Robertson. I'm the Business Development Manager for Aura Lending Services. We're a boutique finance broker based in Chisholm. Today I'd like to bring you up to date with some of the positive banking initiatives that have evolved while we're all in lockdown. These initiatives are driven by both the federal government's desire to support the small business sector and moves by the major banks to increase their market share and spread their risk away from the residential space. In the first instance, the federal government have introduced phase 3 of the federal government guarantee scheme. This is called the SME Recovery Loan Scheme. This is a very broadly applied guarantee for loans to small businesses. In essence, the parameters are: the business must not have a turnover of in excess of $250 million per annum. The government will guarantee a maximum of $5 million per loan to a maximum of 80% of the total loan amount. Loans can be for any business purpose, including investment in commercial real estate, but not residential investment. The guarantee can apply to unsecured loans, not necessarily real estate secured loans. The business does not have to have been in receipt of the JobKeeper allowance, which is different to previous schemes. The loan could also be used to refinance existing debt, including debt which was negotiated under the previous schemes. The government had called for interest from the banking sector to manage this guarantee, so all of the major banks can now administer the scheme. However, each bank will have their own policies which will differ between the banks. Also be aware that the business applicant will have to evidence their capacity to repay the underlying loan over the loan term. However, this could be via cash flow projections, not necessarily previous performance. This scheme also, you need to note, will close in December of this year. Secondly, there are a couple of recently announced lending initiatives, especially targeting the SME sector with loans up to $3 million. As an example, ANZ have extended their commercial loan terms to 30 years. Previously, this was 15 years, which is the norm for most lenders. This represents a significant cash flow benefit. As an example, the difference between a 15-year term and a 30-year term for a $400,000 loan at 3% is a reduction of approximately $1,500 per month in repayments. And the borrower can still accelerate payments and reduce the term if you wish. That's a significant cash flow benefit for most businesses. St. George have also introduced a simplified application process for commercial property investment. Now, this can be applied for both purchase and refinance. This only requires to be supported by a copy of the lease and the tenancy schedule, and a clear tax portal from the investor. Rates are as low as 2.39% fixed for up to 2 years. ANZ also have introduced a simplified business loan application for loans up to $1 million. They only need BAS statements and a clear tax portal and a statement of position from the borrower. Again, loan terms up to 30 years and up to 10 years interest only. I'm sure that you and your clients will agree that these are great initiatives, and we believe that there is no better time to reassess your business financing requirements than right now. Call our office for a free consultation to discuss a loan structure to suit you and your cash flow. We can be contacted on 0414 598 271 or email lynn@auralending.com.au. Our service is free. The banks pay us, and you don't even have to change your bank if you don't need to. Looking forward to speaking to you, and thank you for your time today. Thank you.